Welcome to our deep dive into the intriguing world of tax havens and their crucial role in wealth management. In this video, we'll explore what tax havens are, why they exist, and how they serve as a strategic tool for the wealthy to protect and grow their fortunes. You might be surprised to learn that these locations are not just about avoiding taxes. They also offer a range of financial benefits that can enhance asset security and privacy. We'll discuss the various types of tax havens, from well-known jurisdictions to lesser-known spots that attract the ultra-wealthy. Additionally, we'll uncover the legal and ethical implications of using these havens, sparking a conversation about the balance between wealth protection and social responsibility. By the end of this video, you'll have a clearer understanding of how the rich navigate the complexities of global finance to safeguard their assets. So, if you're curious about the hidden strategies behind wealth management and want to learn how the elite protect their fortunes, stick around as we unravel the secrets of tax havens. What are tax havens? Tax havens are jurisdictions that offer low or zero tax rates, along with financial secrecy and favorable regulatory environments, making them attractive for individuals and corporations looking to minimize their tax liabilities. To qualify as a tax haven, a location typically exhibits certain legal and financial characteristics, such as a lack of transparency in financial reporting, minimal or no taxation on foreign income, and strict privacy laws that protect the identities of account holders. Common jurisdictions known for their tax haven status include places like the Cayman Islands, Bermuda, and Luxembourg. These locations have established themselves as financial hubs, often boasting sophisticated banking systems and legal frameworks that cater to the needs of wealthy individuals and multinational corporations. Tax havens attract foreign investments and affluent individuals by offering a combination of tax incentives and confidentiality. By providing a safe haven for assets, these jurisdictions allow investors to grow their wealth without the burden of high taxes. This unique blend of benefits not only fosters economic activity but also raises questions about the implications for global tax systems and wealth distribution. The mechanics of tax havens. Tax havens operate through a variety of sophisticated methods that allow the wealthy to conceal their wealth and minimize tax liabilities. One common strategy involves the use of shell companies, business entities that exist only on paper and have no substantial operations. These companies can be set up in tax havens to hold assets, making it difficult for tax authorities to trace ownership and income. Trusts are another tool used to protect wealth, allowing individuals to transfer assets while maintaining control over them, often with favorable tax implications. Offshore accounts play a crucial role in wealth preservation, providing a secure place for individuals to store their money away from their home country's tax system. These accounts can be used to earn interest or invest in various financial products without the immediate tax burden that would typically apply. Additionally, legal loopholes in international tax laws facilitate tax avoidance. Wealthy individuals and corporations often exploit these gaps, taking advantage of mismatches between different countries' tax regulations. This strategic maneuvering not only helps preserve wealth but also raises ethical questions about fairness in the global financial system. The impact of tax havens on global economy. Tax havens have significant implications for economies around the world, particularly in terms of government revenues and public services. When wealthy individuals and corporations shift their profits to these low-tax jurisdictions, governments in higher tax countries lose substantial tax income. This loss can lead to budget shortfalls, ultimately affecting public services such as education, healthcare, and infrastructure, which rely heavily on tax funding. The ethical considerations surrounding wealth hiding are also profound. Many argue that using tax havens undermines the principle of fair taxation, where everyone contributes their fair share to society. This practice can foster resentment among the general public, who may feel that the wealthy are evading their responsibilities, leading to a growing divide between the rich and the poor. Moreover, developing countries often bear the brunt of tax haven activities. These nations typically rely on foreign investment and tax revenues to fund essential services. When multinational corporations exploit tax havens, they deprive these countries of critical resources needed for development, exacerbating poverty and hindering economic growth. The consequences of tax havens extend far beyond individual wealth, impacting global equity and sustainability. Case studies of wealthy individuals. Several high-profile individuals have made headlines for utilizing tax havens as part of their wealth management strategies. For instance, celebrities like Madonna and business moguls such as Richard Branson have been linked to offshore accounts and trusts in jurisdictions like the Cayman Islands and Bermuda. These strategies often involve setting up shell companies to hold assets, allowing them to minimize tax liabilities while maintaining a degree of privacy. Public reactions to these revelations have been mixed, with many expressing outrage over perceived tax evasion. The backlash can lead to significant legal ramifications, including investigations by tax authorities and potential fines. For example, when the Panama Papers were leaked in 2016, numerous celebrities and politicians faced scrutiny, prompting some to reassess their financial practices. Despite the controversy, the effectiveness of these tax strategies in maintaining wealth is evident. By leveraging tax havens, these individuals can preserve a larger portion of their income, allowing for greater investment opportunities and financial growth. However, the ethical implications and potential legal consequences of such practices continue to spark debate, highlighting the complex relationship between wealth, responsibility, and public perception. Legislation and reform efforts. In recent years, there has been a growing recognition of the need to address tax haven abuses, leading to several legislative changes aimed at curbing tax avoidance and evasion. Countries like the United States and members of the European Union have implemented measures such as the Foreign Account Tax Compliance Act, FATCA, and the Common Reporting Standard, CRS, which require financial institutions to report information about foreign account holders. These laws aim to increase transparency and reduce the appeal of tax havens. International cooperation has also become a focal point in the fight against tax havens. Organizations like the OECD have spearheaded initiatives to promote tax transparency and establish guidelines for countries to follow. The Base Erosion and Profit Shifting (BEPS) project is one such effort, encouraging countries to align their tax policies and close loopholes that allow for profit shifting to low-tax jurisdictions. However, enforcing these laws globally presents significant challenges. Variations in national regulations, differing levels of political will, and the complexity of international finance make it difficult to achieve uniform compliance. Additionally, some jurisdictions may resist reforms that threaten their economic interests, complicating the global effort to combat tax haven abuses effectively. In this video, we've explored the complex world of tax havens and their significant implications for global economies. We discussed how these jurisdictions operate, the strategies wealthy individuals use to conceal their wealth, and the broader impact on government revenues and public services. We also highlighted real-life examples of celebrities and business moguls who have utilized tax havens, as well as the ongoing legislative and reform efforts aimed at curbing these practices. As we wrap up, it's essential to reflect on the importance of transparency in wealth management. Understanding the ethical considerations surrounding tax havens can help foster a more equitable financial system, where everyone contributes their fair share. If you found this discussion insightful, we encourage you to engage with us. Please subscribe to our channel for more content on wealth management and financial strategies. Don't forget to like this video and share it with friends who might be interested in learning more about the hidden aspects of wealth and taxation. Thank you for watching.